Gold hit a two-week low Monday morning, and silver also lower following the stronger U.S. jobs numbers that came out on Friday. This also puts the Federal Reserve's interest rate hike back on the table, possibly for the year. Frank, thanks for joining us today to talk about gold and silver's price ranges here.
Well, the only thing exciting about gold right now is Michael Phillips winning 19 gold medals. And it appears right for the gold and silver medals, that's where all the news is going to be for the next 10 days. But yes, those numbers last week on Friday regarding jobs, which we commented would be the touchdown pass for the week, had a huge surge in interest rates. So if you look at the 2-year, 5-year, and 10-year government bonds, they actually fell much more. The rates rose much more in that rally. And you know what? That's just part of that noise cycle that we're dealing with. All the threat rates are going to rise in the U.S. I think are short-lived, especially because we saw the Bank of England drop and basically are going to institute an $80 billion cash injection in the economy, dropped interest rates. I think numbers were running around $200 billion of quantitative easing out of the UK to stimulate their economy. So yes, go gold, and not just the Olympics, but it's also in all these countries printing lots of money.
I love the Olympics reference, Frank. So let me ask you, is the crowded trade, because some would say it is a crowded trade, in the precious metals right now starting to unwind?
No, I don't think so. I mean, as I just mentioned, it's the UK, and now we're seeing this in Japan. We're seeing it in China. China immediately has another announcement of more quantitative easing. Gold imports into China had slowed down, but still, we're talking about millions of additional ounces going into that country, and it's still never enough. I disagree with that. I just think we're in that lull period in the first 2 weeks of August before gold starts to ratchet up.
Well, you are right, because the rising price trend since the start of 2016 remains intact, and short-term softness represents, backing and filling action right now within a new higher price range. So is that what you're seeing, Frank?
That's what I'm feeling, and I share with you, Danielle, and talking to gold analysts that have been going around New York City and Boston. Most of these non-gold funds are way underinvested, in particular in the Canadian market. The pension funds, etc., they're way underweight. The Canadian Toronto Stock Exchange is pushing 8% gold stocks, and many of them are only 2% weighting. Before, in the previous cycle, they bought both the GLD bullion and they bought gold stocks. So I think we've got another big wave coming in here of repositioning their portfolios before year end.
All right, Frank, on that note, what's your touchdown pass going to be this week? What are you eyeing for gold and silver that could really move prices here?
PPI, Producer Price Index, is usually a precursor to the CPI number, which is coming out next Tuesday, the following Tuesday, but it'll be PPI.
All right, Frank, thanks so much for your thoughts this week. And thank you for watching. We'll see you tomorrow on Kitco's Gold Report.